Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the Australian versus the US dollar as price looks to have rejected our key area of interest. So this week we were looking at the Australian versus the US dollar because of the currency strength meter. We identified that the Australian dollar was a very weak currency coming into this week, but in the reversal zone. So in our week ahead analysis video, we talked about the 0 spot 67 handle being a real point of interest for us this week, because it would be the point of where either the Australian dollar strength was going to return to the market or the Australian dollar weakness was going to remain. Now we expected to see if the strength was going to return, was Aussie US dollar to trade through this area here above the daily 200 moving average and then see price continue higher. However, we talked about the fact that we had this downward trend forming in the market, and the market was making lower highs and lower lows, and most recently found support at a key structure point of 0 spot 65.75. Ever since then, we've traded back to the upside. We've come back into the 0 spot 67 lows, and you can see how price has started to reject that area there. You can see that we've had many failed attempts to get above that level, and today you're kind of seeing the repercussions of that. Price has started to trade to the downside here. We've got a nice strong bearish candlestick there, which could suggest that price is going to continue to trade to the downside. Now this could be a little bit of a positioning move ahead of the FOMC tomorrow, so we do have to be careful of that, because if the Fed are going to be super dovish in tone, price could reverse and end up being back to the upside. So we do have to be super cautious that that could happen. However, at the moment, from a technical point of view, we can see that the market is breaking through multiple levels of interest. We had almost like a consolidation or a minor range build up in and around this 0 spot 67 handle, and today the sellers have finally won out of this level and price is trading lower. Now if traders were looking at this for opportunities to the downside, now they could be looking for price to come back into those previous structure areas. So we've already marked out the 0 spot 65.75 handle, but you could also argue that there is a potential for price to come back down into this swing low down here, which is around about the 0 spot 65.90, or a little bit above it is the 0 spot 66 handle. So that is also an area of interest for those sellers looking to push price back to the downside. Now if I go down to the hourly time frame, we have to ask ourselves the question: if the sellers are going to be active in this market, what would they be looking to do? Well, they'll be looking to sell on any particular rallies. Now rallies can often lead price coming back into previous structure areas or previous highs. So you can see here there's a level just in around there, that previous low on this hourly chart. See if price will pull back into that area and see if sellers get active again at that point, and if they do, sellers could be looking to push price beyond the recent lows that's been formed and down to the key recent swing lows. So a little bit of a short video today, mainly talking about the technicals around the Australian dollar versus the US dollar. We're breaking through multiple levels of support now. I'm expecting it to come and test other areas of support on the way down. We'll have to see how price reacts to those areas, but it looks like the sellers are in control of this market at the moment, which could mean that the price is going to continue to trade even lower. I hope you enjoyed this video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.